Good morning, friend. Let's dive into the Long Condor options trading strategy for cryptocurrency in the USA, focusing on how to aim for minimum profit. Key concept: the Long Condor. The Long Condor is a four-legged options strategy designed to profit from low volatility, meaning you expect the underlying cryptocurrency's price to stay within a defined range. It's built for limited risk and limited profit potential. Think of it as a wider version of a butterfly spread, giving you more breathing room for the price to fluctuate. Why a Long Condor for minimum profit? Because it thrives in low volatility environments, the Long Condor allows you to define your risk upfront. By selecting the right strike prices and expirations, you aim for a high probability of a smaller, consistent profit, rather than chasing huge speculative gains. Regulatory note for USA traders. Before we begin, a crucial point for traders in the USA. The regulatory landscape for crypto options is evolving. Always ensure you are using a CFTC-regulated exchange or platform that is legally permitted to offer crypto options to U.S. residents. Examples include the Chicago Mercantile Exchange CME for regulated crypto options products, and some platforms like Crypto.com, which offer CFTC-approved UpDown options. Many offshore platforms are not accessible to U.S. users. Always do your due diligence. Step-by-step process. Executing a long call condor for minimum profit. We'll focus on the long call condor, as it's typically initiated for a net debit and profits when the price stays within a range. Step 1. Market analysis and underlying asset selection. Choose a stable crypto asset. Look for a cryptocurrency that you anticipate will experience relatively low volatility and trade within a predictable range until your chosen expiration date. Bitcoin BTC or Ethereum ETH are common choices due to their liquidity. Neutral outlook. Your primary outlook should be neutral, expecting the price to remain range-bound. Step 2. Selecting your options, contracts 4 legs. The long call. Condor involves 4 call options with the same expiration date but different strike prices. You will 1. Buy 1. In the money ITM, call lowest strike. Strike A, this is your protective lower wing. 2. Sell 1. At the money ATM or slightly in the money ITM, call second lowest strike. Strike B. This is your lower short strike, where you want the price to stay above. 3. Sell 1 at the money ATM or slightly out of the money OTM. Call second highest strike. Strike C. This is your upper short strike, where you want the price to stay below. 4. Buy 1 out of the money OTM. Call highest strike. Strike D. This is your protective upper wing. Key principle for minimum profit. Equidistant strikes. Ideally, the distance between strike A and B and C and D should be roughly equal. This creates a balanced profit zone. Net debit. You will pay a net debit a premium to enter this trade. This debit represents your maximum potential loss. Step 3. Calculating your target profit zone. Maximum profit zone. Your maximum profit is achieved when the underlying crypto's price expires between your 2 short strike prices, strike B and strike C. Calculating maximum profit. Maximum profit equals difference between strike B and strike C, net premium paid. Example: if strike B is $100, strike C is $105, and your net debit is $2, your max profit is $105. $100, $2, $3. Step 4. Managing for minimum profit. Let time decay work for you. Theta. The Long Condor benefits from time decay, positive theta. As time passes, the extrinsic value of the options, especially the short ones, erodes, which is favorable for this strategy. Monitor the underlying price. Keep a close eye on the cryptocurrency's price. Exit before expiration optional. You don't always need to hold until expiration. If you achieve a substantial portion of your potential maximum profit, E.G., 50 and 70% before expiration, Consider closing the trade to lock in profits and avoid unnecessary risk from sudden market moves in the final days. Manage break-even points. O, lower break-even. Strike A plus net premium paid. O, upper break-even. Strike D, net premium paid O. Your goal is for the price to stay comfortably within these break-even points, and ideally within your sweet spot of strike B and C. Step 5. Risk management. Limited loss. Your maximum loss is limited to the net premium you pay for the trade. Predefine your exit strategy. Decide your profit target and your maximum acceptable loss before entering the trade. Position sizing. Never allocate too much capital to a single trade. Conclusion. The Long Condor in crypto options offers a calculated approach to profiting from range-bound markets. By understanding its mechanics, carefully selecting your strikes, and diligently managing your position, you can aim for consistent, minimum profits in the exciting world of crypto options. Remember, always trade responsibly and within regulatory guidelines. Please like, subscribe, and comment.